Yes, well, that's why we've seen all those luxury stocks down so heavily in the past week or so, because the exposure that I have to China. You know, it was all good news on China. The appetite of the Chinese consumer seemed to not slow down. But now, of course, you know, the clouds were just lifting for this sector because you had at the back of the US-China trade tensions that we were worried about an impact on the sector. Then you had the digitax impact, potential tariffs on some leather goods, French leather goods. All this was going away. So there was a hope, you know, for 2020, all these troubles were going away. And now we have this potential risk of an epidemic and the impact on the Chinese consumer, less travel and less consumption in China. You know, you had the Hong Kong protest there. There was also a bit of an impact that we saw in the past couple of quarters that was mainly offset by mainland China. We saw that from Richemont last week as well. Now, not so much as a concern actually mainland China because of the potential epidemic. There could be an impact there as well. So
where do we look for it in the numbers? Because very different components, of course, across LVMH. You've got the wines and spirits division versus, say, the luxury goods, which has a lot of the handbags in perfumes, watches and jewelry. Is it just concentrated mostly around that wines and spirits business because of less hospitality?
There's also the leather goods, you know, that is the money-making machine of LVMH. That's almost 40% of the revenues there. And that's what Chinese consumers have a massive appetite for, whether it's when they travel, when they're on holiday in mainland China, or when they come to Europe, when they come to Paris. You just have to go to those luxury stores to see that, you know, there's still a great appetite there. There's a lot of Chinese consumers that still want it. But, you know, we still expect the results to be really good. It's been a bit in the past 3 quarters, so it's not a question about this quarter. The results are expected to be really good. But of course, we're waiting for a comment from management. There's a call at 6 p.m. This evening, and we want to see comments of potential impact for the first quarter. You know, we've seen also this stock up almost for 50% last year. So there's a bit of profit taking here as well, probably on the back of this crisis.
How much does, I must be honest, I have a long time ago bought an LVMH handbag for a partner, long ago, but they've gone up in price. And I don't know how much an LVMH handbag can be now. $5,000, $4,000, pretty much.
Closer to about $2,000.
So between $2,000 and $4,000. Yeah, I mean, and then you can get to a Birkin bag, which is 5 figures, yeah? So we're talking about a very, very expensive purchase as well. Now, my question is, people aren't substituting this for buying food or buying supplies at home. These are rich enough people anyway to be able to buy these. So are we talking about a compression or a squeezing of demand into a period after this crisis reaches its apex as well? Because what we've seen in previous weather-related events as well in the US and elsewhere is where people withhold their purchases, and then in the second quarter or the quarter following, we see a boom. Exactly my point. So I'm wondering whether this is a story of actually, for those investors who are looking at these companies thinking, well, these are withheld purchases, but they are going to happen anyway at some stage.
Well, that's the question, and that's why they're waiting to see where the influx point is in this crisis and see where, so there's a bit of visibility for this consumer to see whether the positive effect will come back in Q2 or Q3 and have a bit of visibility there.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.